Broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. My name is Patrick Kim, and I want to thank you all for joining today's WorkComp webinar. So for today's bootcamp session, we'll be going over the quoting and underwriting process for workers' compensation. Now, the purpose of this webinar is to get you all familiar with what the WorkComp quoting process and underwriting process is like, and how we can try to expedite that quoting and underwriting process. So when you're prospecting or working with a group that needs workers' compensation, the less information we need to pull from the insured or the group, the better. This is so that we can focus more on quoting the group instead of asking for missing items, and we can make the entire process a lot simpler for everyone. And we can also reduce the back and forth emails and phone conversations for little bits of information here and there. And which helps us get the quote out faster. And we can also stand out to the group because we can get the quote out not just faster, but also a lot easier with much less headache. So as always, this webinar is recorded and everything is general information. So if you have any more detailed or specific questions, we'll be having a Q&A section at the end of this webinar. So we're going to start with what the quote process is like, what's needed for the quote, how to expedite the quote process. Then I'm going to go over the underwriting process. What is it that underwriters are looking for, what are red flags to keep an eye out for, and what the general overall process is like. I'm going to go over to how premiums are calculated, and then how to read the quote, and then finally a Q&A session. So what is needed for a work comp quote? Really, the first item that's almost always needed is the Accord 130, which is essentially the Universal Workers' Compensation application. So even though the Accord 130 is pretty much a requirement, it's a form that insureds really don't like filling out. The form has a lot of boxes. It can look scary for folks that rarely see or use a workers' compensation application, and which makes it look a lot more intimidating than it actually is. However, there are some very specific items that are needed by all the boxes, which essentially the listed items here are really what's needed. See the business name, mailing address, entity type. A lot of this is really basic information and is actually information that can be pulled on any employer application for any medical carrier. And this is where we can start to expedite the workers' compensation quote process. The duplicated information on the work comp app and employer app is what lets us kind of pull information from one source and use it for another source. So if you have the group's medical employer application, you already have the vast majority of the information you already need for a quote. And it doesn't matter what carrier you're working with or technically how old the application is. Ideally, we want to use a more recent application just so that we can have that more of an assurance that the information is current. But really, again, you can just take one information from one source and use it for another. So with the employer application, at that point, all you really need are just the work comp specific items, which are what the work comp classifications are for non-owner staff, the estimated annual payroll for those employee classifications, and how many claims the insured had in the past 4 years and how much those claims costs were. If the group didn't have any claims in the past 4 years, then nothing needs to be provided. You can't report something that never occurred. Otherwise, all the group just needs to do is, if they do have claims, they just need to ping their incumbent carrier or agent and ask for a document called a loss run report, which will provide all the details regarding any past claims with that specific carrier. Typically, it's just a very simple email to the carrier or even a letter. I always recommend a formal email because they'll get to the underwriter or the loss control department at the incoming carrier a lot faster. And this is something that carriers and agents have to provide. Carriers and agents are not supposed to hold a loss run report and thus a group hostage saying, we don't want to give you the report because we don't want to lose you as a client. No, they absolutely have to provide that information within a timely basis. Now, regarding the work comp classification codes, the best resource I use is the Work Comp Insurance Rating Bureau's classification search tool. So much like how we use the SIC code search function on the, OSHA's website, we can use the WCRB's class code search on their website as well to help us search it down. So I'll show you how that works right now. So it's a very simple website. It's just wcirb.com. If you do a basic Google search, you'll get it'll be the very top link. Where I go to is, let's go here. So we go to Learning Center and classification search. And pretty much I either put in the code if I already know it, but let's say this is your first role with workers' compensation. You can use some pretty general terminology. So one might be, let's say, programmers, computer programmers. It'll already give you a full list of what the proper class code is here, as well as kind of a very ambiguous description. Programmable, industrial, it has the word program, so that's probably why I pulled up, but generally it'll be spot on. Computer programmer, software development. We can even go a little more ambiguous than that. So let's say clerical. Excuse me. So it'll give that as well up here. And if you're really not quite sure if you actually need more details, you're free to click the actual link. And ideally, it'll give you something a little more specific. Clerical is already pretty self-explanatory, but let's say we go to manufacturing. So get a little more into the weeds. So this is where it'll provide some of the more details. And it'll also try to give you some other suggestions as well, a little lower, typically on the bottom, where it'll say if it's more of this type of industry or these kind of duties, it might be this other classification. So again, that's just to help you narrow down those class codes. Worst case scenario, if you really don't feel confident or don't really feel like trying to do the entire search yourself, you're more than free to reach out to us, and that's something we can assist with. Or if you wish to work a little more independently, you can actually reach out to WCIRB directly via phone or email and provide the information as well. One thing I'll note is that the WCIRB's phone line goes crazy. You'll be very lucky to get a response within the hour. So try to use email if you're going to use that resource. But again, we're more than willing to help you work out what the employee classifications are. So another step of how to expedite the quote process. So this is more for when a medical group is being enrolled. Typically, the two components that everyone seems to really struggle on getting in terms of the workers getting the work comp quote process rolling is payroll amount, the work comp renewal date, or start date of the first employee if it's a brand new startup group. And kind of the ways to work around that is on the medical side is that your chances are you're probably going to ask for the group's DE9C for the purposes of underwriting and enrollment. So that's something that can be used to help quantify what the group's non-owner employee payroll is. Another very fast and easy way also is to use the group's previous or incumbent workers' compensation policy doc. And this is essentially the Bible. It's going to provide all the business sites, it's going to provide all the class codes, payroll amounts, work comp renewal date. It's even going to give us a target premium as well. So this can really be very effective in terms of expediting the entire quote process. So let's say you're prospecting a group that already has a work comp policy. You can just say, give us your work comp policy doc, and let's see if we can beat the target premium that way. One thing to know is that for riskier operations, this contracting groups, manufacturing groups, any groups that might require a hard hat when visiting on site, or they might work with caustic chemicals, These are groups that we have to sort of get into the weeds in terms of what their operations are. There is a formal document called a supplemental application that can be filled out, but this document is even more intimidating, I find, than the Accord 130, the work comp application. So really it's just about asking what sort of hazards the group might come into contact with, and this is going to start getting to more of the underwriting section. But if you can start asking some of these questions, like what sort of materials do you guys work with, what sort of safety equipment you guys work with, I find that those two are the most broad questions that can really help along with quoting and underwriting, because the carrier underwriters are always going to ask for the basic: what materials do they work with, what safety equipment do they use, what sort of safety policies do they have in place. And again, this can also be used to help justify additional discounts to the group's premium as well. So really, what is the underwriting process like? And when it comes to workers' compensation, the underwriting process is not nearly as complicated as the underwriting process for, let's say, a life and health group. In life and health, we really have to consider items like participation, how long members have been on payroll, and whether or not good old Kaiser's involved, et cetera, et cetera. For workers' compensation, underwriters really just care about whether or not the group is part of its market appetite. Is there enough premium to support the risk in the event of a claim? Does the group have lots of claims? What does the group do, or what hazards might they come in contact with? And was there ever a lapse in coverage? So workers' compensation carriers have eligible industries because they want to write business, just like any insurance carrier, but remain solvent. Another kind of a twist to that is also some carriers just might have the tools and resources and are just more able to handle claims of other kinds of businesses. So one particular carrier that might focus very heavily on white collar business, they're going to be very well equipped to deal with claims like carpal tunnel, back injury, eye strain, maybe loss of hearing, typically soft tissue damage. Whereas another carrier that might specialize in contractors, manufacturers, or maybe even plastic molding, they're going to be better equipped with injuries that might have to do with burns, catastrophic claims such as fatalities, claims that might involve rehabilitation services, or maybe even worst case scenario, job training services as well. So a lot of carriers, they try to pull out their own niche, but again, also part of it is just trying to remain solvent to see if the carrier itself has the most effective resources to service these groups as well. And the resources issue, just like I mentioned, is very related to operations and hazards questions. Carriers, of course, also always want to remain solvent, but of course they also want to be able to properly service their groups because they do have particular legal obligations that they have to abide by. Again, and I might have mentioned this in an earlier session, is that workers' compensation is one of the most heavily regulated forms of industry in the United States. That's what makes it very scary when there is a non-compliance issue, but also makes it very, very simple in terms of learning it, because everything's kind of really strictly structured out. When it comes to considering premiums, again, that just goes back to the solvency question. In the event of a claim, the carrier wants to be able to cover that claim and remain solvent. So an example might be, let's say there is a law office with one attorney, and that attorney travels to meet clients, and let's say the annual premium is only $1,000. Well, a carrier that specializes in attorney offices and white collar offices might be hesitant to actually write the group. And this is because if there is a vehicular claim, so the attorney is being a client, there's a catastrophic car accident, the carrier essentially is going to go into the red for paying out a claim, because there's just no way that $1,000 in premium is going to be able to cover the medical claims or the loss in payroll claim for a car accident. Whereas, let's say there's a computer programming office and the premium is $500, and it's just one person working at a desk, the carriers will be willing, probably more than willing to write that kind of group, even if there's such a low premium. And this is because the possibility of a claim is going to be extremely low. And even if there's a claim, the nature of the claim is not such that's going to involve a catastrophic amount of costs. It might involve helping out with wrist strain, eye strain, maybe lower back strain, and the way to address those kind of claims moving forward in the future is also very low cost. Maybe do standing desks, maybe do an ergonomic test to try to make the desk more friendly for the user, stuff like that. Oh, and a few more things, sorry, just a few more things I want to mention in terms of the underwriting process is also claims history. So carriers are less likely to write a group regardless of premium. It could be a big amount of premium, it could be a tiny amount of premium, if the group itself has a long history of just chronic claims. Again, it's all about just trying to remain solvent. And there's also a deep concern that if a group is constantly having claims, what can the carrier do to try to facilitate reducing these claims? And if the group is operating in a way that's so hazardous that no matter what the carrier tries to do to make the workplace a little safer, less strenuous or less harmful to the employees, that even if the carriers are directly intervening and they just can't handle it, the carrier might say, we're going to have to pass you by because anything we do, we can't really help you with. We just don't have the resources to help you with that. Or again, it just could come down to money. Hey, you're paying your premiums on time. We're making money off you at the same time, but because you have so many claims, we're at real risk of going under because of just all of these claims. Now, with regards to loss and coverage for the past years, the carrier underwriters are concerned about this because of compliance. If a group lost workers' compensation coverage for an unacceptable reason, they didn't pay their premiums on time, they didn't comply with a carrier request or something like that, the carrier is going to be very hesitant because any claims that occurred during that lapse in coverage period, the new work comp carrier is going to be responsible for. And presumably the injured member that was working while there was no workers' compensation in place, presumably their injury got aggravated because they never were able to seek out medical services. So the carrier is going to be concerned that, what started off as maybe carpal tunnel might now have progressed into something a lot more serious, permanent nerve damage or something like that, which is going to cost the carrier a lot more. Another concern could be that the carrier is now going to have to get involved in some compliance action. The carrier is going to have to work with the regulatory entities to try to pull whatever information they can from the group to facilitate what the Department of Industrial Relations is going to ask, or what the Work Comp Insurance Rating Bureau is going to ask, saying, how come they didn't have workers' compensation? The regulatory entities are going to go to the carrier first, and then the carrier is going to have to work with the agent or directly with the group itself to try to get all that information, which is going to be which is something obviously we want to avoid, and also the carriers want to avoid as well in terms of having to help enforce any sort of regulatory compliance action. So premiums. So for workers' compensation, premiums are based upon every $100 in payroll. For life and health, it's number of lives, age, rating region. Work comp, very simple. It's just payroll. Payroll is really all that matters. So the way that work comp premiums are calculated is you take an estimated annual amount of payroll, you take that amount, divide it by 100, and then take that lower balance, the remaining balance, and just multiply it by whatever the work comp rate the carrier is charging. And this is called a manual premium. Another way to think of this is this is just a pure premium that the group can expect to pay. These other items, the premium discounts, state managed fees, those are included in the net premium. So the manual premium is just the pure premium balance. It's just the estimated annual payroll and the work comp rate. That's really about it. The other aspects, this is where we start to get into net premium, because after the manual premium's calculated, the carriers are going to start applying discounts because either group qualified for them for any sort of promotion or whatever, or the carrier really wants to win over the group. Those credits that involve the carrier really wants to win the group are called schedule credits. And any credits related to the group's workers' compensation RAF, also called a work comp X mod, that's going to be here. This can be hit or miss, because if the group has a good work comp RAF, they're going to get a bigger discount. But if they have a very bad work comp RAF, they could get no discounts or actually be charged more. So this is kind of how the state and other regulatory entities and the carriers try to kind of push groups to be a little safer and just give that little financial incentive. The rest of the items involved in the net premium are just state mandated fees. These items are not commissionable, and this is money that the carriers collect on behalf of the state to fund their work comp programs. This is mostly stuff for like if a business didn't have work comp and there was an employee injured, the uninsured fund is going to pay out the claims for that injured member. The idea is that just because the business owner made a mistake, the injured employee should still be covered, get benefits, and still be able to work, or at least be brought up to par. So this is just kind of a generic structure of a quote. So again, the way we're going to calculate the net premium, this is the estimated annual payroll. They broke it down, divided by 100 times 0.15, and this is how they got their manual premium. All of this is just the manual premium, 210, 210, 210. The only little kind of, I guess, curveball here is this item here. Balance to minimum, pardon me, a little too early. There we go. Is the balance to minimum premium. So every single carrier in the United States is going to have some sort of what's called a minimum premium balance. And this is really for situations where if the carrier rate is essentially too good, or the group's payroll is way too low, the carrier still wants that kind of minimum premium amount to make sure that in the event of a claim, that they're still able to be able to cover that claim. This is sort of a cushion. So in this particular case, again, the computer programmer software developers, they are very unlikely to get a claim. That's why they have such a low rate. And because of that low rate, the carrier is saying, well, yes, they deserve that very good rate, but in the event of a claim, we're not confident that $210 is going to cut it. That's why we're going to charge a little extra, the $203, just to add a little extra cushion in the event of a claim. And all these other items here, the $1, $4, $10, all these other line items, these are state collected fees. This is stuff that is non-commissionable, and the carriers cannot use to pay out a claim or pocket. They collect the money and then they have to turn around and give it back to the state for whatever they might need. So right here, uninsured employees fund, insurance guarantee, administrative assessment, fraud assessment, all of that is collected by the carrier. Again, for the state. So essentially, to read the quote, this we want to make sure the payroll amount's accurate. We want to know the rate because it can help us calculate the manual rate. But really, when it comes to presenting to the group, I find that most of the time they care about this number, the net premium, because the way they read it is, okay, my old carrier, let's say in this particular case, exact same payroll, let's say the old carrier has a higher rate. The group doesn't really care necessarily as long as this number is lower. So if the old carrier, let's say, had an annual premium of $800 and we present this quote $500, the group, I find, don't really look at this amount. They don't really care about the rate. They just say, oh, I'm saving $298. Hey, great, awesome, let's move on. So essentially it's kind of like the fast and dirty. It's not, even though there's a lot of nuance here with all the calculations and all the additional fees and whatnot, really when presenting, it's just a race to the bottom. Ultimately, that's what groups seem to care about. And also, it helps things move along at a much faster pace. So now we enter the Q&A session. Sorry about I jumped the gun a little earlier. Let's see if there's any questions. Let's see here. Yeah, it doesn't seem any questions yet. Again, for workers' compensation, the quoting and underwriting process is significantly more simple. Probably the most intimidating aspects really is just the document, and that some of you producers might not be too familiar with what the entire process is. And that's why we're here at Beere&Purves, because we do a combination of walking you through the process, or we do the entire process on your behalf. So in terms of explaining the quote, let's say we get a business name or a website, we actually use that website and our own internal resources to try to pull more information regarding the group. What might their loss history be? What might their industry be? So we can get that work comp classification code for you, just to make things a lot easier and simpler for you. So assuming the business is not a startup, on average, we could pull almost everything needed for a workers' compensation quote. I would say the two or three items that we're not able to consistently pull is the estimated annual payroll, the group's work comp renewal date, and what their ownership information might be. Sometimes we can pull it, sometimes we're just not able to, or we can't find the specific group because they might be filed under a DBA, or they might have a totally different filing with the Secretary of State of California. So that's kind of like, that's the only aspect where you seem to not be able to pull that information consistently, but everything else we pull pretty consistently. Again, just to make that quoting process a lot easier for you. And we also provide kind of the underwriting questions as well. So again, when we might get an manufacturing submission, we already ask you what materials do they use, what safety operations they use. Sometimes we're able to pull that information independently because the group might be able to proclaim that on their website, for example. So it might be a chip manufacturer. Sometimes they'll proclaim, these are the technologies, tools, and techniques we use, where this safety organization is certified. All that we can pull, but when you're prospecting independently, let's say, this can really help you kind of knock down what that missing items list might be, or help to expedite what the underwriters are going to ask for. Again, any resource either you have or any resource we can provide, please let us know. We're more than happy to assist you with expediting the quotes or the underwriting process, or even answering any questions you might have. Okay. Well, it doesn't seem like there's any more questions, but if you do have any questions in the future, please let me know. At the conclusion of this webinar, we'll be sending you out a link with my contact information, as well as a link to the recorded session. That way you can refer back to it at your convenience. Again, I want to thank you all for your time, and I really appreciate it, and enjoy the rest of your day.